Ladies and gentlemen, good day and welcome to Medicure Limited Q1 FY23 earnings conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mitesh Shah from ICICI Securities. Thank you, and over to you, Mr. Shah.
Thank you, Niro. Good afternoon, everyone. On behalf of ICICI Securities, I welcome you all for the Q1 FY23 earnings conference call of Medicure Limited. We have our senior management team of the company with us today, represented by Mr. Himanshu Baid, Managing Director, Mr. Naresh Vijay as a CFO, and Avinash Chandra as a Company Secretary. With this, I hand over this call to Mr. Baid for opening remarks. Over to you, sir.
Thank you, Mitesh. Thank you once again. And thank you everyone who's on the call, and thank you for your time. I'll take you through the Q1 highlights and for this particular quarter we are talking today. So the revenue has grown by around 18% if you compare from Q1 of last financial year, so from 203 crores to 239 crores on standalone basis. And as you know, we had given a guidance for FY23 completely as 20% plus revenue growth over FY22. So we are on track to deliver that. As you all know that a couple of new plants will be operational by end of the year. So that will also help us to get this revenue target of 20% plus what we have given a guidance earlier. As you see in this particular, our operating Ebitda is similar to Q4, but at PAT level we have seen some lower numbers, and I think there are a couple of reasons for that. One is our unrealized loss on mutual fund investments, and that was approximately close to 9.5 crores for the quarter one. And also there was some lower other income due to some changes in the portfolio, the rejig in the investment portfolio we did over the quarter one, seeing what was happening in the market, especially our hybrid funds. So we had moved from hybrid to more to debt funds and also to more to fixed deposits. And because of that, as we moved the money from one fund to another fund, there was some realized loss. So because of that, the PAT went down. But if you look at the operating level, the Ebitda is still similar, close to around 24%, 23-24%. So we have done fine in terms of operational business. And overall, if you see now, but in July we have already seen a gain of over 5.5 crores on the mutual fund investment. So I think by the time we end this quarter two, all the losses we have made will be recovered very quickly, and we should be back to track in terms of our PAT numbers. So this is the current situation. Now on the some positive momentums in Q1, I think the most important thing was that the raw material prices have started coming down, and we will definitely see an impact in quarter two performance. We have seen that from peak in quarter four, the raw material prices in quarter one actually came down slightly lower, but as the material delivery takes almost 2 to 3 months, the real impact will come in quarter two. And also now in quarter two, when we look at the new quotations we are getting for raw materials, they are even lower than quarter one numbers. So overall, we have seen a downward slide of around 15% raw material prices, which is very positive for them. That is in rupee terms. So if you see in dollar terms, it could be around 20%. But in rupee terms, already we see a 15% impact in our major raw materials, which is plastics. We are also seeing a downward trend in the freight rates. In last 3 to 4 months, we have seen the freight rates also decreasing by around 15 to around 20%, and in some cases even higher. It will also impact, positively our margins in quarter two and going forward in quarter three and quarter four. Also, there is a devaluation in INR against US dollar, and that is positive for the company in the long run. And as most of our exports are denominated in US dollar terms, so we will see also some positive impact in quarter two and quarter three, as we see forward. And I think rupee still seems to be on a weaker trend. So I think this will definitely benefit the company in the long run, as we have almost 67% of the revenue coming from exports, and out of that almost 70-75% is US dollar denominated. In terms of the business, I think in quarter one, 67% revenue came from exports and 33% was from domestic business. Domestic business were more or less flat because in last year quarter one we have seen a spike because of COVID, but now it's more or less around flat. But we'll see a significant growth in quarter two because there's already an upward trend, and I think in most of the hospitals the patients are back, and I think that is going to really help us in the long run. But overall, I think there's a good growth in the renal business. It's grown over 25% in quarter one compared to the previous quarters. And also, when we look at exports, we have seen a healthy growth in exports in quarter one. And last year, our exports only grew by 10 to 11%. But this year, I think, because of the current trends and the current traction we have seen, we will see exports also growing by around 16 to 18% in this financial year. So that's a good sign. On the US FDA front, it is delayed by 2-3 months because we had to do some additional testing, and that was requested by US FDA. Certain testing related to biocompatibility and for UV light testing, which was never a requirement before. Well, as per our consultants, this requirement is a new requirement which they have flagged, and we are retesting some products based on a requirement. These are only two things which we have to do. This will take around 3 months. So instead of getting FDA approval in quarter two, which we are anticipating very eagerly, it may be pushed to quarter three now. But we have some positive developments in the US. We have signed a contract with a large distribution company, and as we get the FDA, our sales should start with this company. It's a very large company. They have revenues north of billions of dollars, and this company will be putting our FDA approved product in the US market. So we were able to sign the contract with them. We've also hired a new VP sales and a business development person, and he'll be joining the company from 1st September, and he has got experience of around 18 to 20 years. So this person will be also on board. So this will further strengthen our reach in the US market, and this person's main job will be to work with this company whom we have signed the contract, to work with their team and do onboarding and do product let's say approvals into different hospitals, and also work with their team to improve the sales of the product in the US market. In terms of regulations, I think we were surprised by a new bill announced by Government of India on medical devices, drugs and cosmetics. This is a draft bill which was published. We had very little knowledge of this happening, but government was working internally, and they have put this bill on the website. The good part is that there is a separate chapter for medical devices, and this will definitely be a game changer for the industry, as medical device will be treated separately from pharma and drugs. And many challenges we were facing earlier because of being clubbed as drugs. A lot of these regulations were applicable also, which were related to pharma industry. So everything goes away now, and we have a more let's say robust act, and this will replace the Drug and Cosmetic Act of 1940. So the act was very old, and medical device was just implanted into the current act. But now we'll have a separate chapter, separate act, and this will give a big push to the medical device industry. There will be new labs, testing labs for medical device industry. There will be medical device officers instead of drug officers. Also there will be penalties for companies making spurious substandard products, which was not there earlier. I'm sure you recall a case where faulty implants were put in India, and there was very little penalty, charged to a company, and because there was no law to do that. So now there will be penalties for companies who are making substandard products. Most of the medical devices are now getting regulated. So from 1st October, all Class A and Class B devices, which is the majority of the products, will get regulated. So I think we will see a big change in the market, and I think government has already made sure that there will be no extension for companies who don't have licenses to make these products. So, at least now we are moving from an unregulated industry in India to a regulated industry, which is good for us in a way that we are part of the regulated framework. So, at least we'll have a smooth ride on this area, and companies which were, selling substandard products or low price products, and not following GMP standards will no longer be able to do that because of the new regulations. The construction of 2 new plants is in final stages. Faridabad 117 plant will be ready by the end of the year, and Jaipur SEZ Phase 2 will be also ready by October, November. We have also started construction of a 3rd plant, which is in IMT, and this is also expected to be ready by July, August 2023. So the new manufacturing infrastructure which we are creating will help the company to expand the capacity of existing products, invest in new manufacturing. We are looking at newer opportunities, where we will look at expanding to new products in vascular access area. Of course, renal-based business expansion is already happening. We are also looking at working with large companies and global companies. We're also looking at JV opportunities. That will also help us when this infrastructure is ready. We'll be able to do plug and play very quickly and move manufacturing into these new plants at a much faster pace. And the infrastructure will be ready, so we can add some products at a very fast pace as we were compared to earlier years. Recently, we have seen that many companies are trying to de-risk from China, and earlier lot of these companies went to Vietnam, Thailand, Malaysia. India was never on the radar, and but now we see that there is a mandate already with most of these companies to move out of China. And I think with their experience in Vietnam and Thailand and Malaysia not being that great, I think India offers a great opportunity. I think for that, I think Polymed is pretty much well poised because we are creating this infrastructure, and I think there's a big potential, for Polymed to target these companies and look at opportunities to work with them. And I think we are already strengthening our US presence, and most of these companies are US or European based companies. So we are strengthening our base. We already won a very large account in Europe recently in Germany, and that account also was transferred from China and to India to us. So I think we're looking at more such opportunities, like this. And in next maybe 6 to 12 months, we will see a lot of this traction happening in this area. I think India already has a good software potential. We also have hardware because, we have a lot of good engineering talent today. And I think that is a plus point for us. And plus the cost of manpower in India is one of the cheapest in the world. So we are trying to push that to all our customers, the large global customers. We're trying to engage with more companies today and see what we can do together with them. So the contract we signed in the US is just for one product right now. There could be many such products which would come our way in next 1 or 2 years, and that could become a big game changer for us in future. We've also hired some senior resources in manufacturing, R&D, quality, and we have already hired these people in the plants, and we continue to attract good talent across the industry and build great team around us. Recently we received also ISO 14000 for 2 plants. Again, we are very focused on our ESG compliance goals and also on sustainability goals. So we are working very hard on that, and we have made very stiff targets for next 3 to 5 years to reduce our wastages, reduce our water consumption, also do more recycling of materials if we can recycle them internally. So we are doing a lot right now in that area, and we see also savings coming off these exercises what we are doing right now. So over a period of 1 or 2 years, we will see substantial savings also coming because of sustainability measures we are taking. We are trying to reduce the content of plastic on the packaging, reduce the content of paper on the packaging. So we are looking at alternate measures. We are also looking at alternate plastics because we are looking at more biodegradable plastics used in manufacturing and also in packaging. A lot of work is happening in that direction, and ultimately that will result in cost saving, and also it will help us to attract very large companies who are very focused on ESG compliance and on sustainability goals. So we are working on that. We also received MD-SAP certification, which is certification for Brazil, US, Australia, and this is a regulatory approval, and we have received for 2 plants already, and this is an added advantage because this fast tracks our registration process in this country. So this is also a big advantage we have got today. there are very few companies which have got MDSAP registration for medical devices in India. Also, I'm very happy to inform our esteemed friends that Dr. Amrish Mittal, who is a Padma Bhushan and BC Roy awardee, has joined our board as additional director. Of course, this is subject to shareholders' approval in the AGM. Dr. Mittal is chairman and head of endocrinology in Max Hospital, and he is also a domain expert and on the governing board of National Health Authority of India and also president of AIIMS Gorakhpur. So Dr. Mittal has a vast experience in medtech, medical devices, and has a great exposure and is a very renowned name as a doctor. So I think this is a good addition to Polymed's board, and I think this gives a more depth in terms of clinical understanding of products, and also maybe we will take help of Dr. Mittal to even work on new devices and new areas in the medtech field. So these are the comments from my side. I'm happy to happy to get more questions from you, from friends who are on the call, and thank you once again for taking time out and patiently listening to me. Over to you, Mitesh.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Rashmi Sancheti from Dolat Capital. Please go ahead.
Yeah, thanks for the opportunity. Sir, I just want some clarity in the numbers. Can you provide, the sales breakup in terms of domestic and export for quarter 1 of FY22? Like you said for this quarter, but I need it for quarter 1 FY22.
FY22?
Yes,
so
quarter 1.
Quarter 1. So for quarter 1, exports was 125 crores roughly.
Okay.
And domestic sale was 78 crores. So total sale was around 203 crores in quarter 1.
Okay. So basically what I want to understand that, in the last conference call you mentioned that, domestic business we will be doing higher growth of around 24-25%. But this quarter we have done a very lower growth, and in fact quarter on quarter we have seen a decline. So what are the reasons for it, and are we on track that we would be able to achieve 24-25% growth for the entire year?
Yeah, so we are on track. I'll tell you why. Because in that 78 crores, around 20 crores was more related to COVID products, especially on the respiratory care side. If you remember, last year quarter 1 was the Delta wave quarter.
Okay. You mean to say in Q1 FY22, 20 crores was something which was related to the COVID?
Yeah, like the VTM kits and the respiratory care products. So there was a huge demand for those particular products. So demand for those products is completely gone now. So that is a zero demand. So if you look at actually the business has grown, because if you remove those products, then the business, we have added 20 crores on new products basically in this particular quarter.
Okay. And we are on track for achieving 24-25%.
Yeah, exactly. We are on track, and you will see the numbers in quarter 2 and quarter 3. We are already on track, and already we have seen a good July already.
Okay. And on exports front, we have seen 33% sort of growth. So
Yeah.
It is mainly driven by all the infusion therapy business only, or it is from the across segment? Also,
So it is primarily infusion therapy, because that's our core segment for exports. Renal, we are still focusing on India only right now.
Okay. And
Major focus is India. Yeah.
And infusion therapy, the entire part goes to the export business only, or we do supply to the domestic market?
No, we supply domestic also. We have a big share in domestic market.
Okay. So can you just break up infusion therapy, the ratio in exports and domestic?
Infusion therapy, I don't have the numbers right now, but all I can say is infusion therapy constitutes in terms of exports. If you look at exports of 163 crores, which we have done in quarter 1, so out of that, infusion would be around 90%.
Okay. I got
And
it.
in domestic, let's say around 75 crores of business is there for domestic business. So in that, almost 65% is infusion therapy.
Okay. And sir, another question on the dialysis machine. What is the current status, which is under clinical trials? And how many sales reps are we allocating for this machines? Are the machines already installed in the various dialysis center?
Yeah, so we have started installing. So in last year, we installed around 80 machines, and they were like a CKD machine. But now we are developing our own machines. So this year, the target is to install around 150 machines
But
totally.
it is still under clinical trials or it is out of the clinical
It is
trials?
out of the clinical trials. Now we have started the assembly process.
Okay. And
Yeah.
sir, how many sales reps are we allocating for these machines?
No, I can't give you that number like directly that how many. It's a progressive thing. So every quarter, you add people. So we have service team, we have clinical team, and we have sales team. So there are three teams which are working collectively to do this business.
I was mainly asking for the service team only, like,
Yeah.
one person getting allocated for at least 100 machines or 50 machines.
No. So the ratio is much lower. So we are putting wherever we are sending machines, we are ensuring that we have a service team ready to be there in next say 4 to 8 hours.
Understood, sir.
Yeah.
And
So that is how we are trying to establish ourselves, because today if we put in a remote location, we will not be able to service the machine.
okay. And mainly, which are the regions which are focused in this particular
So we are
segment?
doing currently North, West, and South India, all big cities.
North, West, and South,
Yeah.
South India. And
Yeah.
sir, one last thing which I want to know, that generally, as per government rule, in one dialysis center, it is expected that at least 5 machines are to be installed.
Yeah.
So, is this the statement? Even we are doing the same way, that in every dialysis center we are keeping it.
No. So we don't run those centers. It is the operator who will put 5 machines. We are only selling machines to operators like DC or other dialysis centers who are wanting the machines. We don't run those centers.
Okay, sir. And one last question on this only. Basically, whatever machine which we are installing, is it at a discounted price to the MNC players?
So definitely will be, as we are now locally making the machine, will be cheaper in the market, but we are pricing ourselves maybe 5 to 7% lower than the MNC players. And also there was a duty put on these machines on 1st February 2022. So I think as a company we have an advantage, because now making a local machine, and plus also in government procurement, anything which is locally manufactured is given a preference, because of the public procurement orders which Government of India brought in in 2017 and 2020 amended. So that will be advantage for us in government procurement also.
Okay, got it, sir. I have more questions. I'll just move back to the queue.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Sumit Gupta from Motilal Oswal. Please go ahead.
Yeah, hi. Thank you for the opportunity. I just want to get information on the third plant that you said. So first is in the Faridabad, second is the Jaipur, and I want to understand regarding the third plant. Where is it, and what is the capacity utilization that it will be, that you plan it for?
So third plant is again set up in Faridabad. The location is IMT Faridabad. So we already have a plant there, which was established in 2018, sorry. And then, we did various expansions in the plant till 2021. And we were running out of space. So we are expanding the capacity for dialysis and pre-filled syringes in this new expansion we are doing.
Right, sir. And sir, can you give me give a highlight of how the dialysis procurement, dialysis agreement with the government is going on? What kind of?
We don't have any agreements with the government. We only supply machines and consumables to providers.
Right. Obviously the providers, but what kind of traction that you are seeing? Is there any improvement in the month-on-month orders?
Yeah. So as I told you in the call earlier, we have seen a 25% growth in the dialysis business in Q1 already. And quarter-on-quarter, we are seeing the growth happening in dialysis business. Yes, dialysis was a bit subdued because of COVID. But now the patients are coming back, and also the government has revised rates in Ayushman Bharat. So it's 1,500 rupees in Tier 2, Tier 3 cities and 1,800 rupees in Tier 1 cities. So now there's a reimbursement already happening in the Ayushman Bharat program. So because of that, I think we are seeing more patients coming to larger center, and I think all these providers like NephroPlus and DCDC are also expanding their capacities, setting up more centers and more. And as they establish more centers, I think it's good for us because then the demand for consumables and machines will also increase.
Okay, sir. And sir, last question regarding the currency. So you like obviously export the products, and obviously the raw material also is imported. So in that case, the rupee depreciation would not be much of an advantage. Am I right on this?
Not really. Because see, we have more exports than imports, and probably the ratio is I would say we have exports in let's say in dollar terms, our exports are around 75% of total export. So this year our target is to do maybe 675 to 700 crores of exports, and our imports would be around 250 crores to 300 crores in dollar terms. So on that 700 crores, 75 is 500 to 550, 500 crores or 525 crores. So we will probably have a surplus of 250 crores of foreign exchange where we will have a positive impact.
Okay, and majority of this imports that is being done is from countries like Taiwan and countries in Southeast Asia, right?
No, also we have in Europe, we have from US, we have from Japan, we have from China, Taiwan, Korea.
So just want to understand on that part only, sir. So the net exports, obviously not particularly in dollar terms, but in euro and other currencies also. So net it is a positive impact that you are saying.
Absolutely, it will be a positive impact.
Okay, so how much percentage would that be? Kind of like a rough figure?
Overall, we might see, let's say, an improvement. Let's say rupee is depreciated by around 6-7% over last 2-3 months. So net it should have an impact of 2 to 3% on our receivables.
Okay, sir. And sir, going forward, so what kind of working capital cycle do you see going forward? Like the inventory you have maintained for 3 to 4 months. So going forward also you would plan to maintain that, or what kind of working capital cycle?
The current geopolitical situation, every day it is changing. So, and this whole supply chain disruption we have seen in the last 6-8 months, and what is latest development which are happening in China, Taiwan. So we don't know what is going to happen eventually. So we maintain adequate stock of raw materials to cover ourselves, for at least 2.5 months, 3 months. So, but as we have 200 international vendors, so it keeps on fluctuating depending on their manufacturing capability. But we are fairly covered for the moment.
Okay, sir. Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Pankit Shah from Dinero Wealth. Please go ahead.
Hi, sir. Good afternoon.
Yeah, hi.
Yeah, so wanted to understand more on the industry side what you discussed, that after the new bill getting introduced, more of the unregulated industry is probably expected to move out. So in our therapy, or say if you're in infusion therapy or in renal care, how big is this unregulated or say substandard product or unlicensed market?
So I will not call it, so I'll not call it substandard, I will call it unlicensed, unregulated. And almost 70% or 75% industry was unregulated because there was no proper mechanism to regulate, and they were not part of any regulatory framework because there was no regulation in India. So there are two things. One is the old regulation getting implemented, and this is already in process. And from 1st October, Class A and Class B devices will be regulated, all devices. And most of our devices fall in Class B category. C and D are more like orthopedic implants and stents and those kind of long-term implants, which are covered in C and D category. But all short-term usage products are in A and B category. So this is getting regulated first from 1st October 2022. So this is a big change. And with the new act also coming, there is a separate carve-out for medical devices. Now we have currently one drug controller who's taking care of pharma, drugs, cosmetics, everything. Yes. So now there will be a separate department for medical devices only. Yes. So this will actually now regulate manufacturing, import, everything will be more deeply regulated. Currently there was no regulation.
Right. Got it. So, according to you, say for example, 100 rupee is an industry size, and out of that, say 60-70% is unregulated or unlicensed.
Exactly.
So probably an opportunity size should double for us.
Yeah, if the underrated players are kind of weeding out, or probably they will not be able to, let's say, get approvals or licenses, then probably the market will, and plus market is changing. We are seeing more leaning towards Indian company, which is corporate hospitals. So we are getting into more accounts. So now things are changing actually.
Right. Okay.
Yeah.
Okay. And wanted your view on the PLI schemes, both on the renal care and diagnostics.
So that is it's a work in progress. The PLI is always, it has just started this year. So it's a work in progress. So this is the first quarter of the PLI scheme actually, started from 1st April 2022. So we are already making investments, we are already part. So only by end of the year we will know that how much we have done as a progress and have we met those targets. If we meet those targets, we get those incentives. If we not, we can carry forward to the next year and then add it to the next year. So it's a 5-year program. So it's something which is a long-term, goal for the organization.
Right. And on the margin side, so we have seen the other expenses moving quite sharply.
So this other expenses constitutes that MTM loss on investments, mutual funds.
Of that 9.5 crore.
Yeah, that was 9.5 unrealized, loss. And then we are also at realized losses where we move certain money from, hybrid funds to debt funds and then to FDRs.
Okay. And
so when we move them, so we had to realize the losses and move to the, other side.
Right. So this 9.5 is probably the unrealized part, which will probably get reversed in the next quarter or so.
You will already see it because that has become zero now. So from of it and plus already, as I told you, in July only you have seen a 5.5 crore gain on these investments. Right. So in terms of operating margin, operating profit is exactly the same.
And in future, if we would want to avoid this realized loss kind of a thing, as a policy, we are planning to do only debt.
Well, that's a big question. You guys can answer. It's very difficult for me to answer this because everybody was caught off guard on this. And of course, our finance team and of course Naresh is on the call, CFO. He's taking some measures. At least in future, we don't get these kind of losses.
Right.
Yeah.
Okay, great. All the best. Thank you.
Thank you.
Thank you. Next question is from the line of Girish Jain from KJMC Capital. Please go ahead.
Thank you. So I have two questions. One is, can you give some idea about the US business? When do you think the revenues can start from the US business? And what can be the revenue maybe in 23, 24?
So Girish, sorry, please go ahead. And second question, please.
Yeah. And the second question I had was of the money which has been raised in the QIB program, what is left and what is the current debt level of the company?
Yeah. So Girish, I'll answer the first one. And as I informed earlier, as the US FDA has got delayed by a quarter because of some additional testing requirements. So we're expecting the approval to come in Q3 now, and the testing is already undergoing. And these are the two queries which were raised by US FDA, and we are already in the process of submitting them the additional test report. It will take 3 months. The 3 months already started from around middle of June. So that's already in progress. We have already signed a contract with a large US company, as I mentioned earlier. And this is a big game changer for us. And with this company, our major product, the infusion category products, we are going to launch them in the US market. And we expect the sales to start from early January because we expect the approval to come by October or November. And meantime, we're already doing some clinical testing in the US. And once everything is done and the approval is in place, we will start maybe sales in January. And in terms of business revenue for the particular contract and business we have product signed, we see a business of maybe $15 million for this particular product category. But as I told you, the opportunity is much bigger. This company itself is around 15, 18 divisions. So, as we move forward with and more work with other divisions, other category of products, we will maybe see maybe few more products being added to the portfolio in incoming, maybe 4 to 6 months. And we are also talking to other US companies right now, as most of them have a task to move away from China, some of the production. So I think a lot of opportunities opening for us. So I think maybe early next year we'll have much bigger clarity on what we will be able to do in US once FDA approvals are in place, and also when we start exporting products to this one particular customer and then add more customers in this category. In terms of debt, Girish, I think the debt, we have not added any new debt. It is all on the reducing side. In terms of QIP utilization, I think we have already informed. I think maybe I'll just give you a number if I have. Yeah. So we have utilized almost 188 crores in capex. We have invested around 16 crores in the subsidiaries, overseas subsidiaries. We have recapitalized them. And we have done 61 crores of repayment of existing loans. So we have around 130 crores which is still remaining under the QIP, money which we had raised, 400 crores. And most of it will be utilized in next 1 year or so in all the existing projects.
Okay. Thank you, and all the best for the 25th year of the company.
Thank you, Girish. Thank you so much.
Thank you. Next question is from the line of Sandeep from Arandwati. Please go ahead.
Hello.
Yeah, hi Sandeep. Yeah.
Hi, Manshu. So I had questions regarding, can you give me some numbers on your market share in domestic as well as export market?
That's
like,
a very difficult number to
even a ballpark number would be okay. Like in some
global
space
market
where
is huge. Global is maybe today when you look at vascular access is $30-40 billion. So it's a huge potential, whether it's US, Europe, all over the world. So the products can be sold in every country.
Okay. So is there any?
Huge, so the potential, the market size is huge in every category. So let's say the categories we do, the market would be around $20-30 billion.
Okay.
Yeah.
So that includes also infusion therapy as well as other segments of yours, right?
All other segments also. Yeah.
Okay. And in terms of domestic, like you were mentioning on call, the recent regulation, the government is going to pass a draft bill. So in that, once this 70% of unregulated industry gets regulated, then is there a possibility to gain significant amount of share from these unorganized players?
I think that is already going to happen. See, most of these unorganized players were in the lower segment of the market, tier 2, tier 3 cities. The tier 1 was still dominated by MNC companies. So for us, the bigger pie is we are taking from the MNC companies. For us, that is a bigger, we don't want to go to take market share of unregulated sector or smaller fringe players, because we don't want to reduce our prices and take businesses. We want to take the upper segment where there are MNC companies and where we can, because see, it is getting expensive for them to import. There are now import duties on products which were not there earlier. So I think for us, that's a bigger window of opportunity to replace MNCs from the market rather than replacing the smaller players.
Okay. And in terms of raw materials, I just wanted to understand, like you, as per I have read your annual reports, in that you have said that almost 70% of your raw materials are imported.
Correct.
So in terms of imports, is there any particular country in which you have greater exposure, significant exposure, like suppose China?
Exposure from Korea in terms of raw material, that's a major exposure there.
Okay.
And then we have exposure from Malaysia. We have exposure from Taiwan, Japan. I'm talking about the eastern region right now. China. Then we have Germany, Denmark, US, Italy. These are our major imported raw material markets.
Okay. And one last question I had on margin front. So your margins haven't got below 20%. So this was the first quarter when you reported 19% margin, like in operating margin. So in terms of going forward, what is your view on margins? Will you be able to sustain around 23-25% level, or is there any guidance?
As I told earlier in the call, the raw material prices have started coming down. I'll just give
Yes.
an example of raw material. Let's say PVC resin, which was 135 rupees in quarter one. Now the new quotation has come for 100 rupees. And we
Okay.
consume around 300 tons of PVC resin a month.
Okay.
So that's a drop. And let's say we also use plasticizers, which have come down, significantly from 170 rupees to one. And I'm talking of rupee terms. I'm talking of dollar terms. Right? In spite of the fact that rupee is devalued by 7.5%, still we are seeing in rupee terms almost 15, 20, 25% reduction in key raw materials.
Okay. So can we expect
So
to,
we are seeing this for Q2 definitely, and I think as I told you, some currency impact will also come in play. So I think
Okay.
Q2 we will see an improvement of at least 250 to 350 pips of margin improvement. That's what we are anticipating.
Okay. Okay. Okay, that's all. That's all question. Thank you. Thank you so much.
Thank you. Next question is from the line of Sumit Gupta from Motilal Oswal. Please go ahead.
Yeah, hi, Sumit.
Hello. Hi. Thanks again for the opportunity, sir. Sir, I have two questions regarding the renal segment. So first, have you seen any quarter-on-quarter improvement in the market share? And second point is in the revenue share for the renal segment. So what kind of improvement has been there? In FY22, it contributed around 7% of sales. So in this quarter, what kind of percentage share would be?
So renal has grown actually, if you look at quarter one to quarter one numbers, grown by over 25%. If you look at the renal business on quarter, when you compare quarter one to quarter one of last financial year. And
so it's a volume basis.
Yeah, so I'm coming to that. So in terms of total, I think on the domestic business, the renal's contribution would be around now 10%.
Okay.
Yeah.
So
But again, our focus still is in vascular. So renal is one of the new businesses we are developing. But our core business is more important for us also, which is our bread and butter business.
Right, sir. So my point was, so renal is taking share from into the core business or in the contribution to the total sales.
Exactly.
So infusion therapy segment, that is expected to be around 60-62%, like you guided.
Exactly.
Before.
Absolutely.
Okay. As well as and within renal, so it is expected to currently it is 10% this quarter.
Yeah. So this year our target is to close renal by around 100 crores. So last year it was around 56, 57 crores. So this year our target is to close renal, business by FY23 around 100 crores.
Okay, sir. Thank you.
That is the growth rate we are expecting in renal over the year.
Okay. Thank you, sir.
Thank you. Next question is from the line of Krishna Prasad, individual investor. Please go ahead.
Yeah, sir, thank you for taking my question.
Yeah.
First, you mentioned about, this US FDA query.
Yeah.
And, some delays to the eventual approval.
Correct.
Can you just talk a little bit more about that? Actually, I'm not very aware of, how that process works with devices. So maybe if you can just, help me understand and how does this delay the process, and is there a specific target date or a specific timeline provided to you for approval? Thank you.
Yeah. So, of course, I've answered this before, but I'll answer it again for you. So, basically, FDA approvals in medical devices is based on 510K approval. So, anything which is higher risk category goes to FDA for review directly, and certain products exempted, but the categories we operate are basically high risk devices, medium to high risk devices. So, we have to do all the testing, clinical approval, testings are done on the product, and biocompatibility testing is done on the product. So we are expecting the approvals to come in quarter 2, but because they've asked to do some more biocompatibility testing, so the approval is probably delayed by 3 months. So we are expecting now the final approval to come in quarter 3. So that is number 1. Number 2, sorry, the second question you asked?
No, this is one question, just to follow up. So have you now submitted what was requested of you? Or
yeah, we'll be submitting. It will take 3 months. As I said, middle of June we receive the queries. It will take 3 months for resubmission because to do some testings are done by outside labs, third-party labs, not done internally. So the third-party labs almost take 3 months to do biocomp tests. And once we have the results, we will share with US FDA. And probably the timeline would be around 30 days to 60 days for them to do a final approval.
Okay, understood. And that timeline is specifically provided 30 to 60 days.
Yeah.
Or is there?
FDA has their own timelines. Yes.
Okay, understood, sir. Second question is, relating to this, mutual fund investment book that you've been talking about.
Yeah.
So, the last annual report that we see, I think, is FY21, 22 is not out yet. So let's say 21, I don't see any investment in hybrid funds. Is there a reason you moved from bond funds or debt funds to hybrid funds?
So FY21, there was very limited investment. FY22, we raised the funding when we raised the QIP money, and that is where this money and the surplus funds of the company are parked in mutual funds. Mostly were in debt funds, and I think debt funds actually gave a negative return in quarter one, and that is one of the reasons that we have unrealized loss of 9.5 crores on that.
Okay, you said some realized losses as well, right?
Unrealized.
Okay, so these were not realized losses.
No, but they have been booked in the P&L because that's how we have to do it.
Okay, all right, thank you.
Thank you. Next question is from the line of Rashmi Sancheti from Dolat Capital. Please go ahead.
Yeah, thanks for the follow-up. Just again on the US business, can you let us know the name of the products? How many products have you applied to the US FDA, and which are those products? And when you say that, $15-20 million, these products has got the potential, when can we expect that kind of revenue to come in? In which year?
Could you repeat the question, because I think a lot of things I've answered earlier, but I think is there any specific point you want to ask, Rashmi?
Yeah. So basically, what I want to understand, when you said that you have applied for the high risk products, for the US
products.
Yeah. So can you just let us know which are those products out of your total portfolio? Can you name them, whether those products are catheters or basically?
There's a lot of confidential information there, but I can tell you this is from an infusion portfolio. These are our core products and the core products which we today manufacture and supply globally, and those are the similar products from the infusion portfolio.
Okay, from the infusion portfolio. And when you say this 15-20, these products have got potential, to make sales of around $15-20 million in the US business. By what? By which year are we expecting this kind of sales?
No, so I've told about one product category which we have signed a contract, and that is a potential of revenue of 15 million over 5 years. Now, similarly, there will be more products we'll add during next 1 or 2 years that will also add more potential to this business.
Okay, basically it is over 5 years.
Yeah, correct.
Okay, and another question is
one
that...
product only, Rashmi, just one product. So there could be multiple products actually in future.
Understood. And sir, my last question is on euro depreciation. Do we have any impact or any impact expected from euro currency?
No, I don't think, because we have taken our our benchmark euro is almost between 80 and 81 when we do our business planning. So if it is in that range, I think we are pretty good with that.
Oh, all right, sir. That's it from my side. Thank you so much.
Thanks, Rashmi.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask a question. So we don't have anyone in the question queue. Would like to make any closing comments?
I think thank you again. I think I'm thankful to all the people who were on the call and were they had a very deep dive on and they had a great study on the company. And thank you for all the encouragement. All these questions actually help us to do better every quarter and improve our performance. And we look forward to talk to you in coming few months also. Thank you so much.
Thank you very much. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.
Thank you.